Hi there, welcome to Kneppy Invests. In this video, I'll be looking at 8 ASX stocks that actually look interesting to me. And as we head into April 2021, I'll be actually paying a bit closer attention to these 8 companies. Now, the reason they look interesting to me are for various reasons, and some of those reasons aren't that good or haven't been that healthy to the share price. Now, whether these companies are a buy, hold, or sell is going to be up to you. I'm just doing this video to share some ideas. Now, I've separated this video into 2 parts. I'll be focusing on 4 companies in each part, and this is part number 1. So the 4 companies I'll be looking at in this video are Kogan, Technology One, TPG, and Telstra. Now, one of these companies, Kogan, I've actually bought and sold quite a few times through its history on the ASX. It can be quite volatile, particularly when Ruslan Kogan decides to sell some shares, and the market doesn't really like that, and you can see the share price get punished when that happens for some inexplicable reason. Research has shown that when a director sells, the long-term share price is largely unaffected. Maybe the short-term share price is, but over the large term, it's not really that affected. I've owned TPG in the past, but I'm not a shareholder now. And Technology One and Telstra I've never held before. So let's get to the first company, which is Kogan. So I'll be looking at charts for each company, and in this chart I'm looking at the weekly chart going back 4.5 years. And the one thing you'll notice here is the share price action over the last 4.5 years overall has been quite bullish. You're getting sort of the bottom left to the top right. Well, if you take away the last few months or so, because the share price has been under a little bit of pressure during that time. But the share price has gone from about $1 and all the way up to $13 currently. But during this 4.5 years, you'll notice quite a few downturn periods. So downtrend periods, and during downtrend 1 back in 2018, the share price went from $10 all the way back to $2.70. So that was a 73% decrease in the share price, and no doubt that's because Ruslan Kogan decided to sell out some shares, and the market just panicked when they saw that. The share price then went in an uptrend, and we saw another downtrend at the start of 2020. That was downtrend number 2. And the share price went from $8 to $3.40, so that was a 58% decrease in the share price. And right now we're in downtrend number 3, and that downtrend number 3 has taken the share price from $25.50, the all-time high, to $12.50. That was the low a few weeks ago. So that's a 51% decrease in the share price. So is this the end of the downtrend? Well, that remains to be seen for now, but there are potentially some promising signs. Now, the other thing is, in between all these downtrends, you'll notice we saw 21 consecutive weeks where the share price went up, and that was just after the COVID-19 financial panic, when the market realized that a company like Kogan was really going to be benefiting from the country being locked down as people use online stores to buy their stuff they needed. So Kogan really did benefit from COVID-19. And I think what the market is thinking now, the complete opposite. As the economy opens up, people are going to be spending less online, going to the malls. That's where they're going to be spending their money. So that's why the share price has been decreasing. But the question is, has the market overreacted? Because the markets always tend to overreact on the upside and the downside. And it's up to us to figure out, has the market overreacted when it comes to the decrease in the Kogan share price? Now on to the daily chart for Kogan, looking at the past 6 months. Now, during this 6 months period, the high was $22. We did see a bit of a short-term uptrend just before this high, and actually was involved or was a shareholder on Kogan. And the reason I sold out was because they released a business update on the 29th of January, and the market didn't like it. This was an immediate sell for me. It was a signal to sell because the market didn't like it, and this is a very powerful sell signal. Share price went down 8.5% on that day. There would have been some holders who would have been confused about the market reaction, and they would have thought this was good results or good update, and they would have thought, oh, the market's overreacting, and they would have maintained their holding or possibly even buy in. And this is a reason why you should never disregard the market reaction to this sort of news. So the share price kept on dropping and dropping and dropping. Then they released their half-yearly results on the 26th of February, and again, the market didn't like these half-yearly results. Share price went down 10%. Now, in subsequent weeks, the share price hasn't reacted quite as negatively as the first business update on the 29th of January, but there's been a definite downtrend since then. But that downtrend looks like it could have been broken towards the middle of March, and the share price has gone sideways. And there is a potential double bottom. That's when you get the share price reaching the same level, few trading days apart, and that could be a signal of a bottom in the Kogan share price. Remains to be seen. The only thing I'll say is we do see the on-balance volume going down, and what that means is when the share price does decrease, we're seeing larger volume coming into the market. You can see that in the past 6 trading days, where those 4 down days you see previous to the last green update, there was more volume on those days, so more selling. And then on that last trading day where we did see the share price increase, there was actually less volume on that. So I'd like to see different setup. I'd like to see when the share price goes up, more volume coming in, and when the share price goes down, less volume. But if the share price gets above about $14, that would be a bullish sign and a potential higher high, higher low setup, potentially anyway. Second company I'll be looking today is TPG. I haven't been a shareholder of this company in the past, well before the start of this graph. Now, the interesting thing is when I delved into TPG, when I looked at their chart, I couldn't go anywhere further back than this in ComSec. So I decided to find out why, and when I looked at the announcements, they had to admit to the ASX when they merged with Vodafone. I'm not sure the reasons why, so I'm going to have to do a little bit more research on that. So I was a shareholder of this company well back, maybe 5 or 6 years ago. Now, when you look at this graph, this is the sort of graph you don't want to see if you're a shareholder of a company. Share price is going from the top left to the bottom right. That's a well-defined downtrend. You want the complete opposite. You want the share price going from the bottom left to the top right. Now, on the last trading day of the week, we did get the announcement that David Teo has resigned as a director of the company. Now, in my opinion, he was one of the main reasons you would be invested in this company and the merged company, I suppose you can say. So my first thought was, is this a sign of trouble? And the market agreed with me. There was a fair bit of selling during the day. In fact, the share price was down over 10% at one point, finished down about 6% for the day. There was a little bit of buying towards the end of the day. And if I was someone who was keen in buying into TPG, if I thought they had a bright future, I'd just be patient, wait for a shift in sentiment. Right now, the sentiment behind TPG is quite negative, and there's no reason to buy in just yet. Just wait for an uptrend to develop, and that's when you jump on. Now on to Technology One, and this is the weekly chart looking at the past 3 years. And the first thing that you really notice when you're looking at this chart is the share price of Technology One has been going sideways for about 2 years or so. So it is trading in a channel between about $9.50 and $7. And right now, it's near the top of that channel. So there is potential we might be seeing a bit of a high in the share price, and the share price might be trading over the next few weeks. And the last 2 lows didn't quite get to the channel bottom of about $7. So a little bit of strength when it got a little bit low there towards $7.50. A little bit of buying came into the market. So that actually is a good sign. Now, a feature of this company is the amount of fund managers and advisors who absolutely adore this company. I hear it all the time on podcasts, on anything in articles, that sort of thing. And one of the side effects of fund managers and advisors loving a company is they can really drive up the share price and the valuation of the company. And that is definitely true for technology. One, they would say you have to pay a premium for, very good quality companies, which is probably true. But I think they've pushed the valuation of this company a little bit higher than it probably should be based off the financial metrics or the financial growth rates. So the PE ratio is greater than 40. I think right now it's about 48, which is quite high for when you compare the PE ratio to the financial growth rate. So the revenue growth rate is about 8% per year over the past 10 years, and the free cash flow has been growing at about 10% over the past 10 years. I'd like to see those numbers a little bit higher with a company that has a PE ratio of 40 or even greater. Sometimes when you look at shorter time frames, you can get a different perspective. I definitely get that when I look at the daily chart the last 6 months for Technology One. And the share price right now is at resistance, but I could argue that the share price is trying to develop into a new uptrend. So the one thing about this potential new uptrend is the low volume. I would like to see a little bit higher volume. Now, there was a bit of a breakout if you go back to about the 19th of January when one of the directors did buy 25.5 thousand shares. And I wanted to know why there was large volume coming into the market at that point. Was there a good announcement? That was the only announcement that was released around that time. Now, that is the resistance line. If you remember the previous chart, that goes back way back for 2 years, and it's right at that level now. So what happens in the next few weeks is going to be very important for Technology One. If it can go above $9.50, stay above there, that resistance could turn into support, and we could see this uptrend or developing uptrend continue for the short to medium term. Finally, on to Telstra, and I'll start with the daily chart over the last 6 months. It does look interesting because this definitely looks like a higher low pattern. So these are the higher highs. So we start with the high back in November, and each high is the share price is at a higher price than the previous high. And the same with the lows, although the most recent low is almost at the same level than the low before that. So you could maybe suggest that is a good support level. But in any case, we do see an uptrend pattern developing here with Telstra over the past about 5 months or so. The next chart I want to show you for Telstra is the monthly chart, going back all the way to when they listed in the late 1990s. Very interesting chart, I found this. Now, the share price increased quite rapidly just after they listed. I think it went from like $3.20 all the way up to $8. So if you were someone who bought into the listing or the IPO, you would have loved Telstra for the first few years. But from about 1999 all the way to 2011, the share price just went down and down and down. Without doubt, a definite downtrend there. And it went all the way from $8.20 to $2.50, the low. So that low again was reached in 2018, and that price probably was and is a good time to buy, or good price to buy. Now, a little interesting feature I did find with this chart is the relationship between share price movement and increase and decrease in volume. What do I mean by that? Well, we did see an increase in volume as the share price was going down between 1999 and 2011. And when the share price started to go up, the volume decreased. Now, I don't think that's cause and effect. I think what's happening here is, say you have $5,000 to spend on Telstra. If the share price is going down, you can actually buy more shares with that $5,000. So I think that's what's happening here. I don't think there's anything really to read into this. And then over the last 5 years, the volume has been flat, and really the share price has been doing nothing over that period of time. Now, one of the reasons I wanted to show you this graph and just note the volume is in the next slide, I'm going to be looking at on-balance volume. I haven't really talked much about on-balance volume in the past, so I will sort of introduce it in the next slide. So in this chart, it's an identical chart to the previous slide, except I've included on-balance volume. So that's what OBV means. And on-balance volume is very easy. So what it does is each day or each period, you look at the share price movement and look at the volume. If the share price goes up, you add that volume to the on-balance volume. If the share price goes down, you subtract that volume to the on-balance volume. And what that's showing you is the strength in the share price movement. So if the on-balance volume is going up, you can see or probably infer that there's a lot of buying coming into the market and vice versa. Now, typically what you see is when the share price is going up, on-balance volume should be going up as well and vice versa. But sometimes it's the complete opposite. So here we have decreasing on-balance volume as the share price is decreasing. When the share price is increasing between 2011 and 2015, we see increasing on-balance volume. And when the share price starts decreasing, we see decreasing on-balance volume. But sometimes you don't get that relationship. You in fact get the reverse. Sometimes when you see the share price decrease, you might see the on-balance volume increase. And that's what we define as divergence. And you see that in around 2009, when the share price continues to fall for about a year or so, we start to see the increasing on-balance volume. And when you get divergence, that is a good sign that the trend might be changing. So you can see here, the trend took a while to change, but that was the first sign that the trend might be changing. And we're not seeing that right now. So even though there is signs of maybe the share price starting to get into an uptrend, the on-balance volume is not increasing or decreasing. In fact, you could suggest it's still decreasing. So if it's still decreasing as the share price is increasing, that would be a negative, suggesting there's a bit of weakness in the movement in the share price, and we could see this uptrend fail. So that's all for this video. In part 2, I'll be looking at Zuno, Horizon, Kathmandu, and St. Barbara, 4 very interesting companies. Zuno's share price is in a well-defined downtrend. It keeps going down, and the more the share price goes down, the more interesting it gets. Kathmandu released their half-year results last year. And Horizon and St. Barbara looks like there could be a change in the share price downtrend. So have a close look at all 4 companies in the next video. Now, I'm not a financial advisor, so if you do need to seek financial advice, make sure you seek out someone who is qualified and can speak to your own circumstances. That's all for this video. Have a good day. See ya.